Good day, my name is Naso Carstens and I'm going to be taking you through the Foschini FY22 EIA. Right, so for our event we had FY22 results coming out. We saw good acquisition growth. In terms of valuation, we reached an intrinsic value of 142 Rand, which implies a 20.5% upside, and we recommend a hold. This is informed by high EBIT margin and multiple volatility, which allows for fairly large error margins in terms of valuation and profitability variance. In terms of market share, Foschini has been growing its market share over the past few years reliably. Some of this is due to M&A activity. However, it's important to note that this is not all in line with its aspirational core, and it's likely to depress margins. Foschini's balance sheet is fairly encumbered relative to peers and suffers from a fairly high debt burden. This is also largely due to acquisitions in previous years. In terms of our macroeconomic factors, revenues are highly dependent on the following three factors in our estimation: interest rates, total income, and inflation. In terms of interest rates, we are hiking, albeit from a very low base. Historically, this hasn't been the decisive factor, but still an important factor. Therefore, we see total income as our deciding factor, and we forecast income growth of about 8.5% for 2022. In terms of inflation should come in below income growth and in absolute terms, and should allow for clothing expenditure and discretionary expenditure by consumers over the year. Then what would change our mind? Income growth coming in below our forecast at 8.5%, and possibly consumer confidence knocking consumer spending. Right, so we had our FY22 results. Results were fairly decent relative to peers. We saw a return to profitability as well. In terms of our gross margin, we saw improvement to 48.5% from 45.5%. And this is due to less write-offs and promotions. The operating margin improved to 11.2% from 3.7%, and this is a reversion to the longer-term average. The Tapestry and Jet acquisitions are likely to stabilize volatile margins. However, they're likely to have a depressive effect just due to the nature of these businesses. Tapestry acquisition early in the year is in line with the group's long-term strategic diversification, and the planned Jet store rollout is likely to place the balance sheet under further strain with further planned Jet home store and Jet expansions. In terms of our macroeconomic factors, as we said, interest rates are coming up from a historically low base. We have a graph coming up to illustrate that. In terms of our total income consisting out of private sector wages, public sector wages and social grants, we forecast a 8.5% combined growth. In terms of inflation, we see food inflation accelerating over the year. However, this should come in and peak at around 6 to 7%, which is in line with our forecasts. We foresee these three combined events to have a mixed, albeit positive, impact on volume. Right, so this graph just shows you interest rates over time, the green bars showing cutting cycles and the red bars showing hiking cycles. And this should show you, if you look at the bottom graph, how price performance has been largely dependent on total income growth and not necessarily as focused on interest rate growth and interest rate movements necessarily. Right, in terms of our valuation, just to give you a high-level view of how we think of valuation, we construct different scenarios, being our bear, base, and bull case scenarios, based on different factors that we manipulate, and then we reach a weighted intrinsic value based on high-level factors such as macroeconomic outlook. And as we said, against a current price of 119 Rand, we see 20.5% upside, and we rate the stock as a hold. Hold is informed by qualitative and quantitative factors. Amongst our qualitative factors, we have a high debt burden, which is a concern. We have EBIT margin volatility, especially in comparison to peers. We have multiple volatility, and we see less upside from interest rate hikes in relation to peers. Then quantitatively, we have a fairly high valuation upside. There's definitely a lot of negativity priced into the stock. We rate Foschini third in our consumer discretionary universe, first being Mr. Price, then Truworths, then Foschini. Right, thank you for listening. In order to place a trade, please speak to your financial advisor or contact our trading desk.